Hey everyone, welcome back to Corporate Decoder. Today we're diving into the financial world of TriSalus Life Sciences. This report is filled with financial twists and turns. It's like a medical drama, but with spreadsheets instead of scalpels. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. TriSalus is trying to get its financial house in order. They're offering to exchange some special stock called Series A preferred stock for regular common stock, along with asking the stockholders to change a few things about that preferred stock. Why are they doing this? To simplify their financial structure. TriSalus isn't huge. They mark themselves as a smaller reporting company. Now that might make some of you think, well, should you be looking at the report if it's a small company? But remember that small companies have a lot more potential to grow, and that's where you might find gold. This document is what's called a prospectus. It's basically like a sales pitch to convince people to exchange their special stock for common stock. Scroll bestness Chromanatural. Let's understand what the company does. TriSalus is a business that's trying to improve how we treat solid tumors using interesting disruptive drug delivery methods. Specifically, they focus on liver and pancreatic cancers. Core corporate contact information scroll. TriSalus' headquarters are Westminster, Colorado. The company stock is listed on the Nasdaq exchange under the symbol TALSI. Scroll inclusive of accrued dividends to through August 10, 2027 scroll. The company is offering 3.3 shares of common stock for each share of special stock called preferred stock. The offer expires on expiring July 23, 2025. Why? To simplify their capital structure. Now it's about to get interesting. Parties representing approximately 55% of the special stock already agreed to this, which means this is probably about to happen. If that does occur, TriSalus has the option to force the remaining holders to convert at a much less favorable, i.e. worse rate. There are some conditions before this exchange conversion happens. The most important one is that is approved by the SEC. Now let's scroll down to the juiciest part of any financial filing, the risk factors and the financials details. The stock being offered here is risky, so the report comes with a warning label. One big risk is the company's history of losses. They've spent a lot more money than they've earned, and they don't expect that to change anytime soon. Like many smaller companies, they mention that they might not be able to raise financing in the future, stay afloat, or service debt. Scroll commercial acceptance. TriNavScroll, another high risk to their plan mentioned in the filing, comes from a product and service called TriNav, and the fact it might not continue to be accepted by the market. We may not be able to generate sufficient cash. That's an issue and should cause you to take a big pause. The following information, the financial reports of TriSalus, might be useful. Revenue increased by $27 million. That's about 42.0% growth for the 3 months ended March 31, 2025. Much higher levels need to be achieved to service their massive debt. Sales of TriNav is what's driving this. Gross profit increased by $2.2 million. Gross margin decreased from 85.0% to 83.7% for the 3 months ended. This is not what you want to see. The costs also went up with the revenue, and this is something key to watch out for. For example, a 2% drop in gross margins eats deep. We need to know why. Here is another big one. Research and development spending, which is very common for small drug companies, decreased by 43.6% during this time. This to me is an indication that they are not creating and working on new stuff, which might make it harder to grow revenue in the future. A big glaring warning is highlighted. We have not obtained a third-party determination that the offer or the consent solicitation is fair to preferred stockholders. Always take note of this because they are potentially screwing you over. This smells fishy. The document dives into their legal structure, the voting rights of directors, the different classes of stock, and how difficult it can be to force the board of directors to do anything. Even the company says it's doing everything to manage risk, but risk is everywhere, so do not get too complacent. Things like supply chain issues and cyber attacks could seriously disrupt their operations. Scroll operate our business.